Hello, everybody. This is Anthony for Investors Underground. Welcome to part 2 of this interview with the one and only Lance Breitstein. If you haven't watched part 1, I highly recommend going and doing so. We'll leave a link in the description box below. In part 1, we talked about Lance's trading history, his path to success, the importance of mindset and psychology in trading, community, mentors, and some of the common mistakes that traders make. So without further ado, let's pick up where we left off.
And even at the elite level, a lot of people have these ideas or theses in their head or these views, and that's not where I've seen anybody ever make money. The place where people make money is you have these ideas, but the technical pattern and the chart and everything is confirming it. Like, it's fine to have a bias. If stocks are down 30% in 3 days, I'm not going to be thinking, ooh, this might be a good short. Of course, you're going to be long biased, right? But until that setup reveals itself, until A, B, C, and D show itself and fits your playbook to confirm your long thesis, that's where the money's made, right? When thesis meets setup and meets price action, that's where people do well.
How do those sort of issues compare with how elite traders think?
Yep. So I'll even bring one more common bias, because that's probably one of the biggest things is I would see so many people with so many limiting beliefs. They would say, oh, I can't do that. That's not my style. That's not my type of trade. That's not this. That's not that. And so even I've been friendly and working with this guy, Austin Mitchum in Australia, really great elite Australian prop trader. And when we first started working together, obviously I do some capitulation stuff, some reversals. And when we first started, he would say, oh, that's not my type of trade. I can't do that. And I said, why not? If that's where there could be money, why not build this? And he's like, you're right. I see there could be money in this. I see that I need to do this. And so many people over the years that I've worked with, you can even make them aware of their limiting beliefs, but unlike Austin, they don't have the ability to reprogram those. And it could be everything about risk taking. It could be about how much size they could trade, how what style they could trade, how fast they could be, how disciplined they could be. And one of the most powerful phrases there is, which always resonated with me, is why not me? If somebody out there can do it, that was always my thought. And so Trillium, they would do this end of the year party with this award ceremony where you would see the top 10, and the top 10 would get on stage and they would get this award. And you would see these guys and you're like, wait, that dude's just like a 27-year-old. That dude's just like 30. That guy doesn't look any different from me. Like, what's so special about that guy? And then you start to say to yourself, like, if that guy did it, why can't I do it? If someone's fast, why can't I be faster? If someone can trade X amount of size, why can't I be bigger than that? And I've never really had those limiting beliefs, because I've always just thought, like, if it's look, I realize, I'm not going to probably be dunking a basketball. Like, there are some very real limitations that you can't ignore. But like, besides like just real hard coded, like I can't teleport within the realm of like plausibility. I'm not going to be able to teleport. But within the realm of possibility, like anything within that you can do. And what I noticed with elite traders is all of them have that mindset. If someone out, like, it doesn't even cross their mind, I can't do X. I've never, ever heard an elite trader say that. They might say, I don't want to allocate my time to that. I don't want to get good at that. You can say, I don't think that will play to my strengths. That's totally valid. But they never say, I can't do X. And they never think that way, right? And elite traders are also open-minded, that they're open-minded in every way. And they think, look, I can do X. It might not be the right decision for me to do, but I can do X. And Man, that stuff is huge because I think why that commonality exists in elite traders is because when you have that type of mindset, the way that manifests itself in your training is at no point do you get discouraged as easily. At no point do you lose motivation. At no point do you, I'm not saying you don't lose some motivation or you don't have some doubts, but you have way less than the competition. And so what happened with my training class is I was probably towards the back of the class. And what's funny is on a P&L basis, I was probably towards the back, if not the caboose. And I saw all these people theoretically ahead of me in P&L terms, just dropping out, just dropping like flies. Oh, it's a year. I still don't get it. I'm never going to be good at this. Oh God, 26 grand a year. Like I'm tired of eating sewer rat for lunch, dinner, and breakfast. I have cereal, I splurge. And so I would see these people dropping off and it was like, oh man, like I'm actually like, it's like you start the marathon in like the back of the race and you just see like all the carcasses on like the sidewalk, people passed out and you're like, oh my God, like I'm doing better than people. Like I start in the back, but I'm doing like, not because I'm running fast, but I'm just sustaining. And I think a lot of that is embodied because you're saying like, why not me? And like, it's just a powerful, for 3 words, those are powerful 3 words.
Yeah, yeah, that's extremely helpful. I mean, the power of perseverance really shows, and it's also interesting to compare how an elite trader might have, dare I say it, more of a growth mindset and be open-minded compared
Yep.
to maybe a new trader who thinks that trading is like everything else in their life, and they can sort of just brute force their way to success.
Yep. And you want to know what's crazy too is, and so some of the top guys at SMB, like they all have their own special talents. One guy has the best feel on the market and on stocks. He has the best feel out of anyone I've ever met times like 10. Like it's superhuman. And you're just like, how the hell did you ever, like, he'll have a call and I'll be like, dude, that's like, in my mind, I'm rolling my eyes and I'm like, that is the dumbest shit I've ever heard. Like literally, like I'll run around naked if that happens. Then like by the end of the day, you just have your head in your hands and you're just like, how did he see that? And so Kenny there at like, and this came up in one of the monthly review meetings yesterday. In my mind, he is the GOAT of the mental game. His sole driver and motivation is he wants to see just how good he can become. It's not about the money for him anymore. Like he's got a brand new kid and everything. He's got other life priorities. He's got life balance. And so a lot of people might say like, why keep doing it? And his why is I want to see how good I can become. And anytime he's ever, we're both big traders. We both would get in like these, massive holes. And he would view all of these holes and all of these setbacks as learning opportunities. This is the cost. And this is a powerful concept as well. Any obstacle is the tuition you're paying to get better. And not just the tuition you're paying, but especially in the trading world, like trading is in a way like evolution. If you lose money or if something goes wrong, if you're doing something bad, you're finding out about a weakness and it's your job to evolve your system. Maybe you learn better risk management. Maybe you learn a new strategy. Maybe you take a trade out and it's all just the evolution. You're evolving alongside the market. And Kenny has this ability where like, I mean, I've seen his style just totally change because he was reaching just sizing limitations, right? And he knew if I'm ever going to be a 50 or $100 million trader, like I need to get scale. I need to trade the bigger timeframes. And I've seen him use options to safely expand that size And that's all. He's not thinking, oh, I'm in $1 million hole or something. Like, how am I ever going to get out of this? Woe is me. He's thinking, okay, this is a setback on the path of me growing. Nobody's ever become a 50 or $100 million trader without losing $1 million before, right? And even my trainer back in the day, he would tell me the story of he lost some huge amount of money in Google when he was starting up, and his dad said to him, like, son, like, God bless, like, this is your biggest loss, because you're on your way to even bigger ones as you keep on growing as a trader. And I think, like, it's just so true. Like, you can't grow if you're not taking bigger losses. And I find that's one of the biggest things that constrains traders from growing, is like, they're so afraid of losses. People are just so afraid of them. And it's like two things. Like, we're playing a probability game, people. Like I don't care who you are. It's probabilities. Nothing's ever going to work out. Imagine telling a poker player you can't ever lose a hand. You want to know what happens? You don't play in the sandbox. And if you're afraid of bigger and bigger losses, like, and I would always tell my guys on the desk, like, it is a mathematical inevitability. Like, there is no way. Risk is linked to reward generally, unless you find some, glitch in the matrix, which sometimes they exist. But in general, like, you will never, there would be these trades where, you could see the firm aggregate stats on some of these tickers. And, let's say everyone made $500, then it would be like, oh, Lance made 50 grand. And want to know what the difference would be? We did the same trade, but I just sized it way bigger. And why was I sizing it way bigger? Because I had just incrementally pushed my comfort level over all these years. And when people say, like, oh, I can't do that, or like, oh man, but like, yeah, what if I were to lose 5K? I'd be like, yeah, you would lose 5K, but in the aggregate, there would be other trades where you make 10K. And it's like, if you're not willing to do that, your gainers will literally, your gainers will never increase unless your losses do as well.
Yeah, no, that's extremely powerful. I think a lot of times traders might get what they call like a red day. And I've seen traders do this before, where they have a red day, and that red day has been pretty much the size of one of their bigger days. And then they get worried because they had this red day, and then they just sort of like crawl into a hole and freak out a little bit because they did like a 1-to-1, right?
And it's prospect theory in behavioral finance. Gaining $500 feels way less enjoyable than losing $500, and that bias, that psychological bias, is so apparent in traders. And so that's why, like, on Twitter, I talk about this bobblehead concept, right? Where you forget focusing on P&L, and instead you're only thinking, what is happening to my long-term expected value? And so here's the thing, like, I'm not going to act like I'm some robot or some, Buddhist monk where I never get upset, frustrated, down on myself. But like, in theory, when you take these big losses, you should be smiling, right? Because you just found a massive opportunity to improve, right? Like, if I lose 300 grand in a trade and because I messed something up, like, what that means is now I can make a fix that's going to save me hundreds of thousands of dollars in the future. And like here's the thing is, like, if you're just making $1,000 every day, $1,000 every day, like, in some of those, the most learning doesn't happen when you're just like punting, just small green days. The learning happens from making mistakes, learning new trades, experimenting, pushing your size, pushing your comfort zone. And it's like, so on paper, you might look better if you're putting up that 1,000 grand 20 days a month. You might look real good. And guess what? I look like an idiot. Most of my career, I looked like an idiot, right? Because I was losing. Even year 3, year 4, year 5, year 6. I was always experimenting. I was always pushing. So guess what? There were traders out there that made money at Trillium every single day. And there I am, up 20, minus 40, up 30, minus 60. going through these holes, going through these dark periods, going through these periods of doubt. And you look, you're like, God, like, why the hell am I doing this to myself? Like, and it's like, man, like, what's this guy doing? Like, I would take the biggest losses in the firm just all the time. All the time, I would just take these losses. And again, you look really, really dumb, right? But what's not seen is like, I'm shoring up my armor, right? It's like, ups, somebody got me there. Boom, risk management. I fixed that. I fixed this. Boom, 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 boom. Then you're like this full knight of armor, and you're like, wait a second. Now that I got all this shored up, what they didn't see when I was taking these losses is these losses. Now that all the kinks are fixed, like now I can just bet huge on this stuff. Like I figured out the puzzle. I finally like got the prescription right, and now guess what? Boom, plus 100K, plus 100K, plus 100K, minus 70K, plus 150K. And it's like, that didn't happen without you looking like an idiot. Well, the other person, was just like, punting 5K every day.
Right. That's interesting too, because, the bobblehead concept, it's a great way to think outside of P&L, but also like you're saying, it presents an awesome opportunity to really fix the holes in your strategy. And I think that's one thing that I really wanted to underscore that I think is so powerful is like, you're not just losing this money gambling and then, just going and drinking for the day. Like you're thinking about how could I have done better here? Why did I, maybe my entry point was off or something like that. Like you're using the bobblehead concept and, negative P&L days to really work on your trading and get better. And I think that's really powerful for traders to hear, which is, sure, you're going to have red days. They're inevitable. The probabilities of the market dictate that. But it's how you use those red days and being able to apply your bobblehead concept to look inward, fix what you need to fix, and go on to the next day.
If you want to know my superpower, actually, especially in those early years, and people ask, what role do emotions play in trading? Is it okay to be upset? Is it okay to be angry? Is it okay to be exuberant? Whatever. And so if I ever had a good day, I would say, holy shit, like this feels good. I like winning feels good. Like improving, accomplishing feels good. I'm going to use this motivation and I'm going to stay late and work extra hard today. I'm going to stay focused. I'm going to zero in and grind this out. When other people are having the good day, they're going off to the bar, happy hour, like, ooh, I can leave early now. And I'm just thinking like, nice chumps, like I'll be flying by you. But then a lot of people can maintain motivation on the good days. But then my superpower was the bad days. And I would, especially in the early years, and it's a very fine line where this is good versus not good, but I would just be so upset with myself. Like I so badly wanted something. I would be so disappointed. I would be so frustrated. So here's the key fine line. It's fine to have anger, frustration, whatever you want to call it, as long as you're channeling it into a productive purpose. So literally, if I had a bad day, if I messed something up again, I would be so frustrated. I would go to the gym. I would come back to the office with food, and I would be there till 8 p.m. And I would just be re-repping that. And I know, like, I've seen so many people, I've trained, like, I've seen so many people. And when people have bad days, they just can't sustain that. Like they lose the mental game with themselves. They get down on themselves. They check out. They leave early. They don't think about the bobblehead. They don't channel those emotions. Channeling those emotions, the 3 drinks at the bar, guess what? Now you're going to trade even shittier tomorrow. And it's like, the thing is, and this is what I would always tell people in my office. Again, mathematically, you will be losing money. That is the job. You cannot have reward without risk. And so now think about this. If every time you lose money, which will, depending on the trader, it could happen from 10 to 60, 70% of days. If for like a new trader, if on 50% of the days, 60% of the days, you're going to be red and you're going to lose motivation and check out early, guess what? you're getting half the learning opportunities I am. Then if on your really good days, you're going to go to the bar and celebrate, guess what? Now you're only actually putting productive work in on like a quarter of the days or something like that. And you just can't afford to lose those reps when you're racing against the clock to beat out this learning curve and make a living. And like, man, like people would just hamstring themselves and ruin themselves because on these bad days they didn't have the grit and the psychological toughness to just work through it. And like it's not easy. Like it sucked for me too, but like you almost need the David Goggins mindset where you're like, good, this struggle. And like that's, again, this is why it's so important to struggle. You need to put yourself through really difficult crap to, like, you know, I've done marathons, I've done these long endurance races, I've been super into weightlifting. And man, I remember I ran this one race. It was like I was soaking wet. It ended up snowing. It was freezing. Like I probably had like pretty bad hypothermia and everything. And it was miserable. Like I was even once I got inside, I was shivering for like the next 6 hours or something. And when you have these experiences, like, guess what? Now I can run outside in Chicago when it's like 40 or 30 or 20 and be like, look, I'm going to be through this. And like when you have that negative 250K day where you just lost a quarter of your whole year, and then you say, Lance, you're not going to leave this office till 8 p.m. until, like, you're not going to do anything until you figure out what you could have done better and you make sure you're never going to make this mistake again. Like that means on the negative 10K day, guess what? You know, that's no skin off my back. Who cares? I'm gonna stay here working. And like, but if you don't allow yourself to struggle and bang your head against the wall, like you don't have any challenging trials and tribulations to like pull on in those times of need where you need to sustain and push yourself.
That's extremely helpful. I mean, I never really thought about it. I mean, the idea of like having a good day and then going to celebrate, yeah, that's great, but there's still a lot of work to be done, right?
Yeah, imagine if you never studied. What are the processes that led to that good day? What was the mindset I had? What was the strengths I showed? You need to study the bad days just as much as the good. It's so, that's another thing that Mike is great at, is anytime someone has a good day, his question is, what contributed to that? Did you get a good night's sleep? Was your mind clear going in? Did you game plan? Did you, whatever it might be for that person, you know, maybe someone just came in with no FOMO. Maybe someone set all their alerts and ran the back testing for it, whatever the case may be. But like, he forces you to reflect on what's contributing to your strengths and your wins, and then also reflect on the losers.
Yeah. And how to do better, right? Like how you could have taken that green day and turned it into an extra green day.
Yep.
Right?
Yep. And even, and it's not just were you great or did you have a good day? It's could you have done anything better? Because if you have a 20K day, but it should have been 50, guess what? You underperformed. Like, I'm sorry to tell you that. And this came up yesterday in one of the meetings. One of the, I think he was actually a trainee, like intern, rookie. And he said, I accomplished for June my daily report card goals. So the goal I set out to do, I accomplished, but I was only up 0.4 of whatever is stop loss. I only made a nominal amount of money. So therefore this month wasn't as good. This wasn't a good month or a great month. And we said, whoa. For all you know, you should have been -2 stops, -3 stops, down 10, 20, 30K. You might have just had like the perfect season of a month, but it was just a tough month for your system or whatever else. And you're new to begin with. Like, so more importantly, you said you accomplished the goal you set out to do. You chose that goal knowing that this goal will lead you to success. If you accomplish that goal and you chose a proper goal purposefully, then guess what? This month was a 10 out of 10. And like with so many people that we work with, you need to ingrain that in their head. It's the whole focus on the process, not the outcome. And I think, and I know there's going to be people on Twitter, on YouTube, whatever, that harp on this interview in general because, you didn't get into the nitty gritty of of specific trades, and you didn't tell me like your system buy A and sell B. But it's what people don't realize is the reason why we're talking about this stuff is because this is actually the content for true success. Like if I tell you buy A and sell B, it's not your own trade. You don't understand it. You don't know why it might work, why it might not work. And you don't have the other skill sets. You don't have the foundation to build upon. It's the same thing as the people that are saying like, how do I adapt this DRC to Forex? It's like I can give you the answer. Like you're not going to be able to adapt it to you if I do that, you know?
And markets
people,
change, right?
yeah. And like people want the easy answer, not the hard true answer.
Yeah. I mean, I'm going to totally botch the quote, but it's something about like great minds think about ideas rather than necessarily just the nitty gritty details, because the details will change from day to day, month to month, year to year. But these concepts of really digging into your strengths or putting P&L aside and thinking about, the bobblehead as an alternative to P&L, those are the type of ideas that if a trader really reflects, and instead of spending 30 minutes to type out an angry response to you, goes and gets themselves a glass of water and spends 30 minutes thinking about how they could get better, change their system, they're probably more equipped doing that to proceed in the market.
And the ability to find feedback, constructive feedback find the signal from the noise, and even it's just so important to, you look at this stuff and it's like you don't the answers you're looking for. Like I remember as when I was learning, you're thinking like, oh man, like what's the magic indicator, time frame, whatever, and people will be like, oh, like are you doing 2-minute bars? Like what is this? What is that? And like then people are throwing Bollinger Bands on it. People are throwing, whatever's on my chart, people are throwing on theirs, and it's like, dude, it's there's nothing. You think because I trade 2-minute bars, like this is now the magical time frame. Like I'll find you a trader better than me that trades every other time frame. There's someone out there, I will guarantee you, 10 times better than me trading a different time frame. And it's like the magic isn't in the time frame. The magic isn't in the indicator. The magic is in the thousands of hours I spent interpreting for me and my systems what these mean. And it's like that's also the beauty of trading is there's no way to transfer that without that person doing the work. Because if there was, everybody would just be some star trader and markets would be, the ops would be gone. But that's the beauty, is like there is no magic bullet, and that's our moat. And like all the things that frustrate people, like me as a trader, I love how hard trading is, and I love how many people fail, because guess what? That's my moat. That's what's going to pay my living for a long time to come. Because guess what? I know that like if somebody wants to compete with me, if somebody wants to be faster than me, have fun, man. Like back in my prime, like nobody on earth was like, for you to be faster than me, you need to put in the 100,000 reps that I did over 10 years, going in every single Saturday, working, 60, 70-hour weeks. And it's like, dude, if you even want to try to come at me, like you can go for it, because I know nobody's putting that time. Nobody's going to be able to sustain that for 10 years. And like that's a true edge as a trader, right? Like you can't magically replicate that. Like the only way to replicate that is just purely through sweat equity. It's the same with like what's the secret to X marathoner or X powerlifter? It's like, dude, they can tell you anything you want, like unless you put those 10,000 hours in the gym, never missing a workout, never messing up your diet, never messing up your sleep, guess what? You're never touching those people. That is just massive edge.
Is it safe to say that part of your edge is not just the amount of experience you have, but also the amount of like grit, tenacity, and just sheer willpower that you've put in over the years?
100%. Yeah. I mean, that's an incredible moat. It doesn't need to be, oh, I'm the best programmer. Oh, I'm better at math than someone else. Like those are very real moats. It's the same with take Charlie Munger and Warren Buffett, right? Part of their edge is they've seen decades of market cycles, right? Guess what? Like all the euphoria of the last couple of years, they've seen that before. They've seen it multiple times. And all the people that are saying, no, Charlie, no, Warren, you're an idiot, you're wrong this time, yada, yada, yada. They've had people tell them they're wrong and idiots every other time, right? And a lot of times edge can just be the huge database of experiences, right? And like that's also the beauty of group trading, right? Like when you're in a community, like if you're surrounded by experienced elite traders, when the shit hits the fan, these are traders that have been through the ringer. Like if you've done 2020 and 2021, you've seen some crazy stuff out there. You've seen dislocations, you've seen high volatility, you've seen meme stocks go nuts, you've seen Avis Group go from 180 to 500 or whatever it did that day. And like in those periods where stuff is going crazy, it's almost like a tribe, right? Where it's like you have, okay, like maybe I've got my 10, 11 years and I've got these styles and these thoughts and something. Then you add somebody else, right, that's seen maybe 2 decades of experiences and they've got this separate playbook and they know like, oh man, like the way we should be making money is this way. And like, so we've even seen that where like the market's been different this year, right? And people all over Twitter are like, oh my God, I'm struggling. It's so hard. I've never seen anything like that. And a lot of these people were used to 2020, 2021, when everything would just go, 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 go momentum and long. And now it's a different market. And that's where there's such a stark contrast between the people that have been there a decade plus, because it's like, oh yeah, I've seen this before. Not everything's a bull market, guys. Like there's other strategies and long momentum. Or there's people that are like, oh my God, like it's so slow. Like my whole trading, it comes down to one day a month. And that's where like people like Kenny, Swang, and myself, we're like, guys, I hate to break this to you, but this is actually what trading is like the majority of times. For the majority of my career, you would hit like the little dinkiest of singles each day, have one like solid chop a week, maybe a couple a month. And like, that was a trading month. Yeah. And like what used to be one trading day is in normal times actually a month. And so the trading world right now is experiencing this massive adjustment period, right? Where they're being forced to adapt. And the thing that comes up again and again is like, you can't afford to lose meaningful money on C trades. You can't afford to trade 20 tickers a day in this market. You can't afford to just bleed money out, because if you bleed money, except for the really great stuff, you're losing 19 out of 20 days in this market rather than 5 out of 20. And the 19 out of 20 takes away your whole one good trade of that month. And it's a big adapting period, but like, that's the beauty of markets, right? It's testing. Can you succeed when it's slow? Okay, you've got the ability to go balls to the wall in a momentum crazy market. Do you have the ability to turn it all off? Do you have the ability to sit there and be disciplined? Do you have the ability to turn it off, but when there's that one good trade of the month, just whack it out of the park? And the top people right now, they recognize that. They're losing minimally day to day, maybe making small day to day. Then on that one big trade, they're still able to take out the bazooka, blast it out of the park. And that's one of the hardest skills there is, because it's scary. Because in a slower market, if that trade goes wrong, or if you're wrong, if something happens, it's not going to be easy to make that back. But that's still, if I'm in a drought and I'm getting 2-7 every single hand, if I get pocket aces, I still need to bet the same amount on those pocket aces, even if I know it's a drought out there. Obviously there's some constraints if you need to, feed the kids, feed the family. I don't want to, whatever else. But that's a tough skill set that this market is demanding of people right now. And it's going to wash out a lot of people, but this has happened. This has happened post 2000. This has happened, post 2008, like 2012, 13, 14, like there were some slow years out there. I remember, and I tell guys this, and my office would make fun of me in 2020, like especially 2021. I was kind of like, I tweeted about this once. I'm like, guys, just know winter is coming. There will be slower times ahead. Like this is not normal. And I would tell them how when I first started, we would literally bring books to work, like especially during the summer. You would just like sit there there would be days where it's like, oh my God, like there was actually nothing today. And I asked my trainer, what would you trade? You do anything? He'd be like, dude, I'm sorry. Like there just really wasn't anything. So, and not that this was productive, like, in retrospect, I probably should have used my time better, but like we would bring books to work and just like, you would get like 3 hours of reading in a day because you're just sitting there. And like for people that have started in 18, 19 and seen 2021, like that's like unfathomable that they can process that. And people are like, oh my God, it's so slow right now. And I'm like, bro, like this is probably like a 5 or a 6, honestly. This year might even still be like, it might even be like a 6 or a 7. Like it's right. You've got the Ukraine-Russia war. You've got the Fed rate hikes. You've seen all these massive panic days. And it's like, I hate to tell you this, guys, but like this year, it's not a 2 or a 3. So that's hard for a lot of people to fathom. Like trading is mind-numbingly boring the majority of time, actually.
There could still be some really great opportunities in this market, given the amount of capitulation that we've seen, especially in early 2022. So like one of the questions I have is about stock selection. Like how important is, stock selection for traders, especially in a market like this? And for that stock selection, like where does their existing playbook or, their existing system play into the importance of that stock selection?
Yep. And so one thing I'll kind of intertwine and bridge that with is, so there's people out there that had their strategies the last couple of years, long momentum, whatever else. And so in this market, they're like, I'm not seeing any plays for me. I'm taking the time off. I was out in LA. I met with this young trader. He's like, oh yeah, my mentor and I, like, we're kind of just taking it slow. Our playbook isn't working so much. And I'm like, dude, like, yeah, maybe if you're an experienced trader and well off, you can afford to take it slow. But I'm like, what are you going to do if this is, are you counting on a 2-month hiatus? Or what if this is like a 2-year different market? What if the trades you're good at never come back? Are you just going to be like the skeleton in your desk,
Right.
like 30 years from now? And so what a lot of people like, look, some people, they deserve and have earned the right to sit on their laurels and not adapt. But it's like, if you're trying to be the best and really crush it, like you got to be figuring out this new market. And so like stock selection on that regard, like so many people have these identities, like, and that's almost like the number one failure of like retail traders. Like some of the retail, and I had zero exposure to this stuff, but now that I see it, I'm like, you guys are nuts. Like for whatever reason, like a disproportionately high percent of retail traders are just obsessed with these low float stocks. And it's like, oh, like, these low float stocks, they get pumped and go higher, but then they tend to mean revert, which is like, okay, I'm not disagreeing, but it's like, does nobody find it odd that like every retail trader on earth, that's like the only like, arrow in the quiver? It's like, guys, like there's a whole universe out there. Like low float trading was probably like 5% of my playbook, maybe like less. And like, I hate to tell this to people, but like there's years where like the low float stuff, like the small, cheap stocks, like those don't move at all some years. Like it's been a crazy couple of years for some of that stuff. There's years where it's like you get a couple runners, maybe a whole year. And so like people will identify themselves, oh, I'm a large cap trader, I'm a low flow trader, I'm a futures trader. And it's like, why have this identity, this false identity, this limiting belief? You're just a trader. Like if you show me an opportunity in trading, Zimbabwean snake breeding rights, it's like, I'll be like, that's an interesting chart. How do I trade it? Like it doesn't matter whether it's like crypto or whatever, like the same psychology and patterns apply. And people end up, I have this concept called the broken slot machine, where it's like, Imagine saying, I'm a blackjack player, and you go into the casino and the odds are 49.51 right now, and you just sit at that table all day and you see someone at the slot machine and it's just spitting out money, right? 7 out of 10 hands, just spitting out these huge payouts. And you don't get up and you don't go over there. You say, why would I go over there? I'm a blackjack player. And you're like, what? Like, what do you mean you're just a gambler? Go gamble where you're going to win. Like, why are you just sitting at this table? No, you don't understand. Like this is what I do. I play blackjack, and blackjack's not hitting, so I'm just taking the summer off. But it's like, dude, don't you see that slot machine? It's like, it's just shitting money out of the front of it. Like, don't you want to go over there? It's like, that's not what I do. It's like, what? Like, you're crazy, man. And it's like, you got to move to where the puck is. And like, that's what I was so good at. It's like, I wasn't a news, like, I'm now known as like a capitulation trader. Thank you, Aaron, of Chat with Traders. No, I do love Aaron. I won't fault him for that. And but it's
great.
like, yeah, he's the best. I love him. Ironically, I met him in Australia just as friends beforehand. I didn't even know Chat with Traders, just through pure coincidence. Uh, but it's like, I don't like, capitulations is maybe one of the things I'm best at, but like, man, like breaking news, IPOs. I was insanely good at doing M&A news. It was just something I had this huge database. So boom, second that headline goes out, I know better than any other fast market participant where that thing should be priced, pretty much within a very high confidence range. And like, I would do low floats, I would do breakdowns, I would short stuff, I would do momentum, I would scalp. And what happens is, having that diverse quiver, that allows you to get through all these markets, right? So like, we would have at Trillium, there would be people that were news guys and exceptional news guys. But look, there's times when news isn't in play. So guess what? 2020, 21 comes along. I smoked all those guys just because like their style wasn't as in play. There were years where there's massive M&A every single week, and they're the best. I mean, some of those news guys are like incredible traders, way better than I was. I had my niches within it, and I was good, but not like, some of them were insane. And so in those markets, those guys would smoke me, because they're the 10 out of 10 and I'm an 8 out of 10 at that, and they would just smoke me. But the beauty though is, in every market I had my quivers. And so if we get into this bear market, like I'm still doing, I've got all my quivers, I got all my arrows there. And so what people need to do is, they need to recognize that like, you're not just building this, if like, and I was even tweeting about this yesterday, like, you need to focus on like the 10-year game, the 20-year game. Where do you want to be as a trader in 10 years? Because guess what? If your only play is like low float or like long momentum, man, that might only be in play in a big way, maybe 2 or 3 out of the next 10 years. So like, how do you build up a business of strategies so that you can thrive in all of those environments? And it's like, that's how you really become, I think, elite at this craft. And there are some people that are just so good at their niche, where it's like, I get it. Like, some people are just so exceptional that they will just make a lifetime's living anytime that thing's in play, and they've just honed that craft. Like, there's definitely credit to that. But if your thing's not in play right now, and you're not, you need to be finding those other ways. You need to be finding those broken slot machines. You need to find ways. Futures trading has been super in play. Crypto trading has been super in play. There's times when the market is super in play. There's times when AMC and GME are in play. And it's like, if you're a low float trader, or you're a futures trader, and you're not trading AMC, GME some of those days in the last couple of years, man, like, you could have probably made hundreds of thousands of bucks. It could take you years to replicate that in a dead futures market. It's so important.
Yeah. That's extremely helpful to think about the broken slot machine, and to just think of ourselves simply as traders, because we didn't necessarily get into this specifically with one particular identity in mind, and yet over time maybe we heard from someone else and that's their strategy, so then we sort of adopt it. I think it makes more sense what you're explaining, which is to just think of ourselves as nimble traders, and if you can find a broken slot machine, by all means,
yeah. And it's just, it's that concept applies to investing, anything, where it's like, if you can find a positive expected value opportunity, like, let's say, it's just, it could be in crypto, it could be in day-to-day life. It's like, I'm just trying to make positive expected value bets, right? That's all it is. And trading stocks is one computer game, but there's a lot of games out there.
How can traders break bad habits?
Yep. So habit formation is probably one of my most favorite, fascinating topics to read and learn about. I've cited this many times before, but Atomic Habits has become my Bible. And so, like, essentially, that's the book that was the perfect summation of everything I had learned independently over my career. And so, ways to break bad habits. For starters, you can control your environment, right? I don't want to be friends with the inactive, people doing hardcore drugs, whatever else, going out drinking, like going to jail. Like, I don't want to have those people in my environment because those will lead to bad habits. I do not have anything sweet, any dessert. I barely have any food in my apartment whatsoever. There is nothing to snack on. If you want to snack, maybe we can whip up some popcorn on a good day. Outside of that, there's nothing there. It is veggies, lean protein, and just clean carbs. That's the only thing in my house. And so that helps me build good habits. And there's ways to systemize all these things just pretty much ad infinity, right? Like if you're on your phone all day, when you should be focusing on trading, there's ways to hide that, lock that up, turn it off, whatever. So controlling your environment is one. Your identity, like we've been discussing, also leads to habits. If you identify as being a low flow trader, and you see there's money in futures, for example, instead of saying, why not me? You start saying, that's not me. And that's a huge, crucial difference, right? Your identity can prevent you from doing the things that you want to do. One bad identity that I have is, oh, I am a huge eater. I am notoriously, with my friend group, a massive, massive eater, especially between working out and running and everything. I've probably developed too much of an appetite where there's meals where I will just go ham, but that's become, part of my identity in a bad way, right? Stuff like that. Or like, oh, I'm a big drinker, right? What does a big drinker do? If a big drinker gets offered a drink, a big drinker says yes, and then has 3 or 4 more, or 10 more, or 20 more, right? So that's one way. Another way is you can change the cues. And I don't mean that as QQQ NASDAQ, but if I know that if I'm in a hole and I know seeing my monthly P&L is going to depress and demotivate me, I can block that so I can no longer get that negative cue. If I know that being with X friend is going to make me smoke a cigarette, I can avoid that cue. And vice versa. If I know my friend is going to run at 7 a.m. every morning, I can say like, hey man, you're running by my apartment anyways. Give a knock on my door and I'll come down and I'll be down every morning 7:05 a.m. So that's how you can structure positive cues. And so a lot of this too then comes down to iterate, because whatever change you make isn't going to be perfect. And this is where you need to tinker. And so maybe the thing is overtrading, right? Let's take that. And so one thing I say is there's many reasons why people might overtrade. Some just love the action. Some want to be proven right. Some get bored. And look, maybe our theory is you get bored, right? So then our solution is, hey, if you're trading because you're bored and overtrading is your main issue, guess what? Maybe it actually is productive for you to watch Netflix during the day. Maybe it actually is productive for you to watch or to read a book during the day. You can't actually do productive work like a zillion hours a day. It would be easy for me to say do that, but I know it's not practical. But you try that and you iterate and you say like, oh man, like I was reading my book, but then like I just couldn't resist the appeal. Midday, I still ended up trading, 10 tickers. So then we say, okay, maybe you can't be in that office environment midday when it's slow. Maybe that becomes you're going to go for a walk and do something healthy, or even better, you're going to go to the gym. You're going to take a healthy adaptive habit and do it during a time when you being on the desk is maladaptive, right? So instead of churning from 12 to 1, you're going to go to the gym or get outdoors or go for a nice walk and have a nice healthy lunch. Now that's how you start to like iterate and make progress and stuff.
Yeah. No, that's extremely helpful. And a couple of months ago, I had very similar to what you're describing. I overtraded for the day, and I went from a green day to a red day. And I was thinking about atomic habits, and I thought to myself, how do I fix this? When I'm done for the day, I'm gonna celebrate that and reward myself by just
Yep.
turning off my computer. So and getting away out of the office. So a lot of what you're saying resonates with me, and I'm sure a lot of other people it will resonate with as well. And speaking of other people, I wanted to dip into some of the community questions. We got quite a few, well, on Twitter. So if it's okay with you, I'd love to ask you some questions on behalf of the trading community on Twitter.
Please.
So we got one question from Maywand, and he asks a two-part question related to risk and scaling in. So he asks, how do you think about risk per setup? Is it something like you'll risk $1,000 on a C grade setup, you risk $5,000 on a B grade setup, and risk $10,000 maybe on an A grade setup? And related to that, how do you scale, or rather, do you scale into trades, or do you have more of a one-shot, one-try kind of approach?
Yep. So this question always comes up. So yeah, first of all, based on the quality of the setup and some other outside factors, I'm deciding how much to risk on that setup. Outside factors, what do I mean by that? Am I well rested? Am I focused? Am I on tilt? Am I vulnerable to any biases right now? If I've been buying X ticker and it's going down 3 days in a row, and then on the fourth day, I'm like, I have this genius idea. I'm going to buy X ticker again. I need to be aware that like, okay, Lance, like you might be a little, rage trading, trying to make back where you lost. So those external factors will dictate my size along with the quality of the setup. So in a theoretical sense, you always need to risk what that trade justifies, right? So even if I'm in a little drought, again, outside of external factors like needing to pay the bills and everything, or like, hey, if I lose, if you lose 100K and that means you get fired, you probably don't want to risk 100K, even on aces, right? And within those kind of constraints, you need to very objectively say, whatever the expected value of this is, the better it is, you need to exponentially bet more. So I would say so most people, the way they bet on a C trade, B trade versus an A trade, they might do 1,000 on the C, 2,000 on the B, 3,000 on the A. What I've really been challenging people to do is develop, rather than a linear bet sizing system, a more exponential one, right? So maybe we don't trade the C. We don't bet the $1,000. We bet zero and we just don't trade it. And then that extra $1,000, we might leave the same for the B and bet 2,000 there. But then ideally on these A's, all those C's we avoided, those 5 C's, that $7,000 we were going to risk on 7 of those, we're just going to throw that onto the A's and we're going to get bet 10,000 there. So now we're going 0 to 10, right? And now obviously on an A plus, we might want to bet 30 off the screen. And so rather than just the steady linear thing, you want to really go exponential. Why is that? So if you were to run, and there's probably some math whizzes out there, with expected value, a couple things are happening, right? The more the inputs are probability of winning, how much you make when you win, and obviously it's a spectrum. That's what makes trading so hard. It's a spectrum of outcomes. When you lose, how much will you lose, and what's the probability of those losses? And so what happens is, as your expected value gets jacked higher and higher and higher, the difference between a trade where you win 30% of the time and a difference where you win 70% of the time, the expected value on that is just so much higher. It's so much higher, right? And so what happens is, the better, like aces are exponentially better than 2-7, right? It's just not even comparable. And so the expected value of the trade is actually exponential, right? You're going to win so much more on aces than 2-7, right? And then when you actually bet exponentially on that, when you do exponential on an exponential, all the math whizzes can create some simple spreadsheet and model this out, but things just go to Lollapalooza world, right? And so that's why I was like, I would have been good regardless, but what made me exceptional was recognizing that fact, right? And so when the really easy layup happens, the layup that everybody in the trade is going to make their 5 grand on, I'm making my 50, right? And that 50 then covers all the like dumb little mistakes I make. And so the more exponential you can get, because again, it's not just the exponential betting, it's that you're betting exponentially more on an exponentially higher expected value. Like again, like if people really want to dig into this, I strongly urge you to model that. Like it's really like mind-blowingly insane what that does to your results. And because edge is so limited generally, right? So when you do this and apply it to your trading, it's just a bonanza because so many people, especially in the slower market, they're losing their whole A trade and all the C's, right? And it's like it ruins you in this market. Like a more active market can cover that up. That's not the case anymore. So it's so much more important. Then as far as getting into the position, in an ideal world, it's just all in one shot, right? If I'm playing some breakout and the level is 9, I want to get my full size at 901, and ideally it's off to the races. If I'm defining a turn as a break of a trend line, when that trend line breaks, I want all my size there. Yeah, that's not always realistic, just given liquidity and size of trading. The only time I will ever add is if that add is an independent trade in itself. Like, okay, I bought this breakout. It's going. We're kind of stair stepping higher. I'll buy that next breakout, that next breakout, that next breakout. But if we're going, I'm just not going to chase and get a worse expected value, right? And so the other thing too is so often when people do these ads, they're getting the bulk of their position when the expected value is best and when like you're compensated for uncertainty. At 901 on that breakout, I don't know if it's going to go. That's peak uncertainty. If you're buying 4 minutes later at 910, like my expected value was generally best there because of that uncertainty. At 910, my risk is now 10 cents instead of 1. My reward is less. And so many people, it's more comfortable to add after confirmation. And I'm not saying it's very situational. There's some times where confirmation can be better, sometimes it's not. But a lot of people will add in the situations where confirmation is actually a worse expected value. It's just gone too far. And they'll take a great average price, add where it's probably mediocre to negative, and then end up with an average trade, right? And so you take a great trade and you get too little because it's scary. You add where it's confirmed and you end up with mediocrity. So I really try to avoid that. You can be a profitable, so many people out there are probably profitable traders, strong traders, but their results are so muddled because of that mistake.
I think that's actually really, really helpful to think about our trades in this way. I mean, and I've heard Nate say this as well, which is like, maybe don't think about these lower grade trades and stick to what's working best for you and stick to your best trades and focus in on those, hone those, and let that be how you trade, especially in a market like we're seeing in 2022. So I think that's extremely helpful. And thank you, Mawan, for the question.
Even a button real quick, yeah. just to add something. One of the most common things I would say in the office was stop focusing on 10 jack, right? Because so many people would just spend too much time on the wishy-washy stuff. They would overlook buying that breakout at 901 and they'd say, what do you think about buying it at 910 or 920 or 930? And I'd be like, look, that's not the trade. Like and they'd be like, oh, but don't you think like it's still justified or it's still worthwhile? And I'd be like, dude, like just forget it. I'm like, stop focusing on the 60-40s, the 55-45s. Not that those are bad or anything, but like, dude, all you need to obsess with is how can you play tens, jacks, queens, kings, aces, all the really, really strong hands to the best of your ability, then just forget about all the rest. But people put so much effort into stuff where it's like, dude, like you're gonna just have so much wasted mental capacity. There's gonna be so many things where it's like, okay, if you buy at 9.20 yeah, I guess I'd rather be long there than short. But dude, you're overlooking the fact that the real trade is that breakout at 901.
Mm-hmm. That's extremely helpful. Like, yeah, that's the trade, right? That's the trade that you want to get.
Don't worry about catching. So many people, it's like, oh, but what about catching the fourth leg? It's like, dude, like the fourth leg is the worst, least probable leg. Worry, like, look, I'm not saying the first leg is necessarily the best. Like, probably most of the times it is, but certainly sometimes the second leg is insanely good. But if you're asking me to, oh, how could I have caught this fourth or fifth leg? It's like, dude, like, I'm not saying there's zero edge, but it probably is. And it's just a waste of time. Like, focus on the best ones.
And isn't there something also to be said about like getting your playbook to the point that you're identifying that first and second leg so that
100%.
You don't put yourself in the situation where you're now looking at something at the fourth leg and saying,
yeah,
like,
you don't want to you don't want to be thinking, oh, how can I capture this leg where at this point Lance is like flat or selling or thinking short. It's like, it's just gone too far. You're trying to like squeeze blood out of a stone when you're missing all the meat on the bone than fighting for the scraps.
Yeah, absolutely. I mean, maybe at some point people will have like a fourth leg in their playbook, but that's probably like not the A grade setup that you're looking for, right?
Yep.
So another question that we had was from Moses Ruppert. He asks, how do you constructively deal with a string of correct trades that all ended in losses? I always feel pain in these moments, and it feels like crap. And then I do stupid stuff. What is the correct coping mechanism?
I think it's just really internalizing the importance of the process, right? Like it's the same thing as if you played a poker hand, you had a good hand, and you lost with aces or something, where it's like, if you truly believe in the process, and if you're, first of all, you need to be confident that your system actually was expected value. If you've done the work and the back testing and the legwork to know, look, these were good trades, these are trades that work for me. And then you also need to make sure that nothing hasn't changed. Okay, the market hasn't changed, like these are still good, yada, yada, yada. Then like, look, like, trust in the process, move on. Like it's just, again, it's, you can run the math. Like you can have a 70-30 coin or a 65-35 coin. Like on a 70-30 coin, you're still going to get tails a bunch of times in a row. And like, if you're going to just internalize that and get upset by it, you're going to just make your life hell. Again, losses are part of the job. This is like, and I would even tell you, like, the best way to think about it is like, anytime you feel shitty, just, smile and say like, oh, good. Like this is the same feeling everyone feels. And this is why so many people can't cut it, because they're letting the noise ruin their life when at the end of the day, it's just noise. My strategy works. It was 3 bad beats, on to the next. And I think like if you really internalize the process, that thought doesn't even come up.
Thank you. That's extremely helpful. And I've heard a number of traders say very similar things, which is you have to be okay with losing as a trader. It's going to happen.
Why are we so afraid of losing? It is in the job description.
Yeah.
You want to become a trader, description. You will lose money. Hopefully you will lose lots and lots and lots and lots of money over a very long time, because that means you're a success. The best traders in the world have lost more money. If you were to take my red days and add them all up, it is probably the most disgusting amount imaginable. Right? But that's good. It's part of the job.
Yeah. No, thanks, Lance. And thanks, Moses, for the question. We have another question from a Not Burner account. Amazing name.
Kind of sounds like a burner account, but
I'm suspecting it's on fire. Yeah. The question is, how can traders quantify and determine what qualifies as a sizable offer/bid for each stock? So, for example, is 1,000 share bid for Amazon different from 1,000 share bid for AMC? And do you usually just eyeball this, or do you run stats on liquidity?
So this is a great question, not because I think it's a great question, but because it's a great learning experiment. So my challenge to you, if I got this question, would immediately be, you tell me. What do you think? I want you to think about this. And so, for demonstrative purposes, I will answer this one. I'll play. And the way you need to start thinking about this stuff is just analytically, right? Let's say you know nothing. Um, what variables can we come up with? I mean, I can think like in an intuitive sense, if I were to talk to somebody off the shop, off the street, if somebody were to sell, um, say the stock's trading at a penny and there's 1,000 shares, and I were to say like, oh, like, do you think that's a lot of money? Is that a big offer? Somebody would run the math and do 1,000 shares at a penny, and they would be like, oh, like that seems like a small amount of money. that doesn't seem big, right? So that's one factor, right? So the notional value of what that offer represents, right? Now, if I were to say, hey, there's a 100,000 share offer in Burke A, which has some ludicrous price and the God knows what anymore, and they were to run that math, and they would be like, holy shit, that is a ludicrous amount of money that I can't even fathom and nobody can even buy. And I would say, yes, that's a big offer. So we use these extremes, right? Like when building systems, you need to use the extremes. And this is where like programming experience is kind of interesting, because you learn when you need to test logic, you need these little test cases, right? So I tested one extreme, I tested the other, and I got these poles. And I'm like, that's sensical. It made sense. So I know that's one method. Now I'm going to think, what other alternatives might there be? Okay, how does it compare to the rest of the book, right? If I were to tell you at every penny, there's 1,000 shares into perpetuity, you'd be like, oh, like that's, or like, what if I were to tell you at 2 cents, there's 200,000 shares, 500,000 shares, a million shares? Then you would start to think like, wow, like in comparison to the rest, that's actually not that big, right? Now on the other, again, I'm going to test the other poll. What if I told you there's a 100,000 share offer and everything else on the book is 100 shares? You'd be like, oh my God, that's a mammoth in there. That's a Goliath. Okay, so now we just got another heuristic, right? How does it compare to other stuff on the book? Now let's come up with a third. If I were to tell you there's a million shares outstanding, and I were to tell you that I own 200,000 shares and I'm going to do an offer for 200,000 shares, you can immediately compute, holy shit, this guy owns 20% of the company. Wow, this person in one offer is putting up 20% of the company. That is a ludicrous offer, right? Like that is a massive amount, right? So now vice versa, if I said, hey, you know nothing else, but there's 100 million shares outstanding and I own one of them, am I going to be a big offer? I don't need to know the price. I don't need to know what anything else. I can immediately say, no, you are a rounding error. And so that's another heuristic. Then we can look at what's the average daily volume. If something's doing 500 million shares a day and you're telling me like, oh, I've got one of them, I can say, okay, you are nothing. If you're telling me, hey, I got to sell 100 million today, again, you're 20% of that. I'm saying like, wow, you're not gonna have a fun time probably. So yeah, and like again, do I have an answer to that question? No, I didn't have I'm not reading off a sheet. All I did just there was I just used logic. I just analyzed. And I would assume I can probably, I can tell you, what did the 30-day average of volume look like? What does the average look like in a bar, right? What's the median bid offer? What is the largest bid offer? Like, so that I see besides that. So there's all these different ways, but that's, I'm just spitballing that, right? But that's how you take any question and you start to systemize and build these things. And it's the same with trading, Lance. Like, it's like, Lance, like what does a good breakout look like? And I can say like, what do the setups look like with no volume? What do the setups look like with high volume? What do the setups look like with the news catalyst, no catalyst? What do they look like with the high short interest, no short interest? And that's what I do. That's what I mean systemizing. I'm taking a question and I'm going down every case of every variable that I can think of, and I'm building this framework of what's good and what's not.
Yeah. No, that's excellent. And thank you for answering that, even though, it was it was a lot to dig into, but I think it's extremely important to provide that sort of answer, because this is the type of things that like we need to be thinking about as traders, and the type of thing that would be great to be able to have researched and then provide that to like an elite trader and
Yeah,
say,
and what's nice is there's scale in giving that answer to this, right?
yeah,
Hopefully thousands of people see, oh, that's how, that's why I could have learned this on my own and stuff like that. It's instructional, it's constructive.
absolutely. There's so much like that we can research and dig in to find an answer like this. And I love the way that you framed it and provided the importance of edge cases, in building out a
Yeah.
system for something like this. So we got one more question, which is from Dax50, who asks, what does the work with a performance coach look like? How often do you talk to the coach? What do they do to help you? Are there any specific exercises?
Yeah, so I've generally been doing every other week. Obviously, some people do weekly, some people do less, whatever, more. And again, so as I touched on before, like oddly enough, we've never largely focused on trading, because it was more so how do I get the other ducks in a row to optimize the whole feedback loop for that. So what would some of the work look like? Stuff like avoiding the comparison game, right? Who cares? If I'm in competition for the top 10 and I want to be number one, like you can never compete at your best if you're looking over your shoulder, right? Say you're a sprinter, and this happens all the time, even in bicycle races, whatever. You'll see the person in first, then they're like, how much do I have? How much do I have? And they're looking over their shoulder. Or there's even like I saw some video online of the bicyclist before he crossed the finish line, he's cheering, and it's like, oh, you're going to regret that one. Then it's, someone passes him. And you learn that like, you can't focus on what other people are doing unless you're trying to learn constructively from them. You need to just do what you can, focus on your own process, what you can control, let the chips fall where they may. And even one of the videos I did for S&B had this amazing quote from, what was his name? Ben Crawford's, some tennis coach in Australia, who just really summarized it all in a couple minutes. But it was essentially like, you put your best effort out there. You can't focus on others, and just let the chips fall. And we've worked on stuff like that. We've worked on interpersonal skills, how to have the hard discussions with people, how to grow as a person, the why for doing things, what motivates me, right? Like, part of my decision to eventually leave full-time trading was my why had morphed, right? When I first started as a trader, part of my why was financial. Part of my why was a chip on my shoulder that I wanted to accomplish this. Part of my why was I wanted to prove that if markets are inefficient, I'm one of the people that can beat them. Part of my why was I wanted to be the top 10 up on that stage, or I wanted to be number one. I wanted to be the best at my craft and see how far I can push something. But then once you accomplish some of that, right, Kenny's why is I want to see how good I can be. My why was partly financial, partly to prove myself, partly to attain mastery in something. And then over time, life changes and your whys change. And so much of my whys had been achieved. And then my bigger life why and what I've wanted to fulfill in life is like, okay, like I'm pretty into Buddhism, and a lot of the research even backs this up, that true happiness comes from gratitude and giving back. And so then it becomes, okay, how can I give back in a way that's fulfilling to me? How can I find balance, right? After a very much not balanced 10-year career, how can I experience life, expand my network, meet great people, and surround myself with awesome, genuine people, and exploring those topics of what drives us and what will drive the next. Again, I'm not playing the 1-year game. I'm not playing the 5-year game. I'm playing how can I be the healthiest, longest living, happy person I can be, right? I could not care less at this point in my life about anything trading related, right? Like I actively avoid trading stuff because the health effects of being sedentary because of the hits of cortisol, because of the stress, yada, yada, yada. I'm solely focused on how can I be the happiest, healthiest person that, gives back and helps others. So that's what led me to these discussions and to the Twitter and the S&B advisory work and the nonprofit. It's all to answer that why.
That is an awesome answer, and I think that speaks to the level of maturity as a trader and the progression that traders may go through in their life. Your why can change. And,
yep.
And that's
having kids, like that's a big one, right? Like Kenny's why is still there, but guess what? When he has a bad day, he says like, damn, like you realize like just how dumb this is, in the sense that like he's not placing his value as a person on his P&L. It's not his number one priority anymore. He realizes that like in the grand scheme of things, yeah, he wants to see how good he can be, but like ultimately his bigger priority is I'm sure he would say this, although I'm putting words in his mouth, the bigger question for him is how good of a dad can he be? Mm-hmm. And then how good of a daughter can he raise? And how good of a husband and all that? Yeah. So, he can correct me if I'm wrong, yeah. But then he's probably in the doghouse anyway. So you lose, man, checkmate. And so, yeah, like life changes.
So Lance, I'd love to be able to go through a lightning round with you, if that's okay. 10 quick questions, 10 quick answers. Would that
New York style pizza over deep dish?
Oh,
I was hoping that would be one, but okay, go ahead.
You know what? I'm actually going to add one of those.
There we go.
So, okay. First question. What's the one piece of advice you would impart on all new traders?
Okay, I'm going to not lightning this one because that's important. It's a combination of not just working hard, but working effectively. And if you can work effectively, then sustain that over time. That is the secret. That's what it all comes down to.
Awesome. Great answer. Next question. What can traders do to expedite the learning curve?
Purposeful, deliberate feedback, and then constructive, deliberate, conscious reps. Not just sit in your seat mindless, but everything needs to be towards a purpose and the goal that will that you purposefully chose to progress you further.
If you could describe the ideal new trader, what would their mind frame be like? What type of habits or traits would they have?
I believe it's just Buddhist in origin. Beginner's mind is you don't have ego, you don't have expertise. You go in with an open mind to learn. You think, you question, you reflect. I think that's so important. So many people come in with their own predisposed biases, identities, assumptions. And so beginner's mind, and then no limiting beliefs from that, and the ability and just hunger, whether that, I don't care what your hunger is. Like, people like, oh, you can't be in it for the money. You can be in it for the money. If that's what makes you, hungry, so be it. You might retire in 5 years once you make it, but that's fine. But you can, money is fine, right? You just need some why. Maybe your why is to be this super cool, big dick trader. And it's like, look, I'm not saying that's a great why. And again, like you might get that and might not be achieved, but you just need some why that's going to keep you pushing through it all.
Do you think it's important for traders to trade at least once per day?
In the beginning, I think you need to get a zillion reps. So much of what Trillium does is you get I don't know if they call it what do they call it? Oh my God, I can't believe I can't even. Oh, amnesty. You get an amnesty, right? So you're allowed to lose X amount. In fact, and this was always funny. Like, again, I'm going to make up a number. Don't quote me, people. But like, say it's 20 grand in like the first 6 months or something. There'd be all these. They're saying, look, just lose this money. We're going to just erase it. Whatever. It's literally the firm's money. Like, burn it, please, do whatever, non-negligently. And like so many people would like just not experiment and be afraid of losing this. And it's like, no, like the reason the firm's offering that is because this is an incentive for you to experiment. And like, so especially early on, you need to be getting reps and you need to be getting involved. Like you don't know shit about what a good setup is. So don't say like, oh, I didn't see a good enough setup. You don't know what a good enough setup is. Like figure out how to take liquidity, figure out how to, provide liquidity, figure out what happens in this type of box, just jump in the pool with both feet. And breaking news, panic, scary stuff, short stuff, get run over, and just you need as many reps as possible, and you need to be reflecting on those reps. So I would say it's probably suboptimal, but then at a certain point, it goes from jump in the water to like, hey, we need to start practicing a swim stroke.
Mm-hmm. Great. And how many stocks would you say traders should focus on each day?
Depends the style. No right answer.
Are there any particular technical indicators that you found to be helpful for you or for beginning trading?
Price, volume. At the end of the day, every indicator is a derivative of that. So look, maybe you like VWAP, maybe you like moving average, maybe you like a Bollinger Band, maybe you like RSI. It's all a derivative of price and volume. Those are just visual representations, whatever makes sense for your style. But volume is certainly quite necessary. And of course, so is price.
Great. And how does learning to ride a flight board compare to learning to trade the market?
Way easier, probably more fun, probably more physically dangerous. Although, guess you could get like a freak office accident. Yes, but it's both. You can end up like in the flow state of just enjoyment and this was something I wanted to say at the beginning, but it didn't. I never got it out. Those beginning years when you're learning are just some of the most enjoyable years there are, even though you're struggling, right? Because it's all new and it's all fresh and it's all exciting. And you just have no expectation. You have no baseline, right? You are literally at the ground floor, and trading is a activity where there's such just objective, clear progress and milestones. And it's just so tangible, and to see yourself hop upon that curve and get better and better and better, and just take in all this information, it's just such an exciting, amazing experience. Being new at anything is, but especially one that then has financial rewards and changes your lifestyle for the better.
Great. And the sample size might be small here, but do you tend to find yourself trading better when you had Chicago style pizza or New York style pizza?
New York pizza all the way. Chicago, you have 2 slices. I'm passed out for the day. It's game over. So New York, give me the fresh mozzarella, the high quality ingredients, little crisp crust, and we're in business.
Good to go. Awesome. Well, Lance, thank you so much for taking the time to speak with me today. It's been an absolute pleasure talking to you.
Likewise, yeah, fantastic questions, fantastic commentary. It was a pleasure to do this with you guys.
Thank you so much, Lance. Take care. If you liked this video, don't forget to hit the like, subscribe, and notification bell. Thanks for watching.